everyone. Welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. Thanks for joining me today. You can find me on the web, as always, at elevationfinancial.com. All right, today we're going to talk about what to do when you lose your job. So losing your job is a bummer. It's never easy. Maybe you saw it coming. Maybe you took it by surprise. There's definitely an emotional toll. Financial uncertainty can be overwhelming. But it's a time to look at some thoughtful planning, be strategic in your next actions, and you can weather that storm and work on kind of the next phase in your life and manage that transition. And so we're going to talk about some key considerations to help you really take control of the situation after you lose a job. So let's jump in first to health insurance. Health insurance is a big concern. One of the most immediate concerns after losing a job. What happens to your health insurance? Without your employer footing part of the bill, it can be really challenging to maintain that coverage. But you do have some options to make sure you've got continuity in health insurance during the time you're unemployed. So first option might be COBRA. If you worked for a company with 20 or more employees, you might qualify for COBRA. COBRA is a service that allows you to remain on your employer's health plan for up to 18 months after your employment ends. So you'll need to pay the entire premium, which is likely more than you're used to paying, but it can provide continuity during that time. You've got 60 days to elect COBRA coverage. And while there are subsidies for COBRA premiums, they're not standard. They might be available during specific circumstances like certain legislative actions or government programs, but in general, you're likely going to pay the whole premium. So COBRA could be an option to look at. Also, there are other options. Obviously, you're going to look at one of the most obvious options if it's available to you, which is join your spouse's plan. If your spouse has a company health insurance plan, you can join that one. That's likely going to be the most affordable. There's also the marketplace. The health insurance marketplace at healthcare.gov is a viable option as well. So under special enrollment rules, you have 60 days after your job loss to sign up for a plan. And depending on your household income, you might qualify for subsidies that can lower your premium quite a bit. These plans are more affordable in many cases than people might think. So take a look at it and run the quotes and compare it. Also, if you're over 65, Medicare is an option. You can do so during a special 8-month enrollment period triggered by end of a job or job loss, and you can take advantage of Medicare as well. So don't wait till the last minute. Make sure that's one of the first things you do. Get up to date on your medical and dental exams while you still have coverage. For example, if you have a period before your employment ends and your health insurance is active for that month, for example, go ahead and take care of procedures, while you've got coverage. All right. So next, let's talk about building and managing your emergency fund. So when you lose your job, cash flow becomes an immediate concern. So having an emergency fund is really essential. So proactively, before you encounter a potential job loss, you want to have done this already, obviously. So ideally, an emergency fund should cover 3 to 6 months of your living expenses. And if you have time before your job ends, focus on building it up as much as you can. Start cutting down things, saving more into it, piling away cash to kind of weather that storm. If your job loss is sudden, obviously reassess your spending, reduce non-essential expenses that can stretch your emergency savings further. So the more you can lower your household expenses on a monthly basis, the longer that's going to last. So cut out things like discretionary spending, subscriptions you don't need, limit eating out, non-essential stuff. Also use a flexible spending account if you have one. If you have an FSA, use it while you're still employed or covered under COBRA. FSAs are funded through payroll deductions, and once you're no longer employed, you can only use them for eligible expenses incurred while you were employed. So plan ahead and spend on things you'll need later, like glasses, medications, medical supplies, etc. All right, now let's jump to reviewing compensation and severance packages. So your next step should be understanding any remaining compensation or severance that you might be entitled to. So check with HR and have them clarify the details of things like any back pay, like unpaid wages or bonuses you might be entitled to, sick or vacation pay. Some companies pay out unused sick or vacation time when you leave. Others may not. So make sure you know what applies in your situation. Also, severance. If you're receiving severance, understand the terms. Some severance packages require you to sign a non-compete or a non-disparage agreement. So take a look at the fine print carefully and make sure you understand the terms of the severance package. If you're not sure about the details, consider consulting with a professional who can help you kind of walk through it and analyze the terms in detail. All right, next, let's talk about applying for unemployment. Unemployment benefits can give you an income stream while you're between jobs. These benefits are state administered, and each state has its own process for determining eligibility and the amount of assistance you'll receive. Usually, benefits last about 26 weeks, though extensions or enhanced benefits might be available during times of high unemployment or economic downturns or certain other unusual circumstances. So you want to apply as soon as possible because there could be a processing delay. So keep in mind that unemployment benefits are also taxable income. So you'll need to account for that when planning for your taxes. All right, budget review is next. You want to trim your budget, obviously, to lower expenses. So focus on identifying areas where you can reduce or eliminate some discretionary spending temporarily. Look at monthly expenses and categorize those into things you need versus things you can cut out temporarily. So, usually things come up like, streaming services or TV packages, eating out, non-essential subscriptions, things like that. Might be a good time to explore other ways to save money, like switching to a low-cost cell phone plan or negotiate lower rates for some of your services, like insurance or internet, for example. Also, if you want to make sure you kind of supplement your cash flow during this time, part-time work like freelancing, part-time jobs, gig work, that can help you bring in income while you're looking for your next opportunity. So sometimes freelance work can even turn into a side hustle that turns into a business. So you never know where it's going to lead, but if you at least take on some extra work in the meantime to kind of bridge the gap, that can really help. Also, when it comes to debt management, contact creditors for student loans, mortgages, credit cards, explain what happened. A lot of times, lenders have hardship programs that you can qualify for that can help you temporarily reduce or even defer payments. All right, next, let's talk about tapping into retirement accounts. If you have a retirement account, you want to make sure you understand your options. So, depending on plan type, your age, withdrawing funds can have penalties, but there could be some options. So one option you could look at is, I'll take that back. First one you want to be concerned about is 401k loans. I'm not saying you take out a loan because you're obviously leaving your employment, but if you have a 401k loan, check the rules to see how long you have to repay it. So in most cases, loans have to be repaid by the tax filing deadline for the next year after you leave your employer. So if you don't repay the loan, it could be considered a distribution, which could trigger a 10% early withdrawal penalty if you're under 55. So be sure you understand the terms of that 401k loan if you have one out there. However, if you're a public safety work like a firefighter or a police officer, you could take a penalty fee distribution if you're 50 or younger, if you've completed more than 25 years of service. So different rules apply. If you have a Roth IRA, remember contributions can be withdrawn tax and penalty free at any time. The earnings cannot, but the contributions can be withdrawn with no penalties and no taxes anytime. So, in a pinch, that can be a really valuable resource if you have to supplement your cash flow during unemployment. Um, if you also, a tax planning strategy you could take a look at is if you anticipate lower income for the year, you could consider doing a Roth conversion. Converting funds from a traditional IRA to a Roth IRA in a low income year can be a tax efficient way to take advantage of lower tax brackets. So you got to time it carefully. If you lose your job in the middle of the year, excuse me, and then by the end of the year you're you're unemployed, but you've got a job offer on the table, knowing you'll be employed the following year, that could be a good timing for Roth conversions because your income for the year is lower tax bracket, convert at a lower tax bracket, and then you can pay the taxes next year because you have an income that's starting up. So that's one example of how you could time it for a Roth conversion. All right, next, stock options and deferred comp. Many employees receive stock options or deferred compensation as part of an employment package. So if that's you, there are a few things to consider. So if you have unvested stock options, they're usually forfeited when you leave your job. But check your equity plan documents just to be sure. You want to understand your vesting schedule to make sure you've got an informed decision about the timing. If you have vested stock options, you typically have a pretty short window, generally about 3 months after you leave, to exercise those vested stock options. If you were terminated for cause, however, your options might be canceled altogether. So again, take a look at your plan to see what your options are. If you have deferred compensation, review the plan documents to understand when and how you'll receive those payments. It's usually distributed either as a lump sum or in annual installments. All right, let's talk about tax strategies. Again, leveraging a low income year could have some tax strategies. Obviously, it's making the most of a bad situation here. If you have a lower than normal income, you could do Roth conversions, as we mentioned before. You could do capital gains harvesting, which means if you have taxable investments, you could sell them in a low income year to reduce your capital gains or even eliminate capital gains. Also, if you have an IRA or Roth IRA, you still might be eligible to contribute that year because you did have earned income at some part of the year. So keep that in mind. All right, career planning, your next steps. Obviously, update your resume, refresh your LinkedIn profile, reach out to your professional network. Make sure you understand any non-compete or non-solicitation agreements you might have in place. And your former employer might sometimes offer outplacement services, so you could take advantage of those too. They can give you support for job placement, interview coaching, resume writing, things like that. Obviously, don't forget to contact or update your contact information with professional organizations, email subscriptions, networking profiles, and make sure that your personal email is on file with all those services so you can kind of stay connected. Networking is one of the best ways to land the job. Network by reaching out to former colleagues, former managers, professional organizations can help you. Social media connections. Reach out to your network. Tap into your network and ask for help. Don't be afraid. Most people are going to be very eager to want to help you. Obviously, look at job boards and industry-specific job boards as well. Kind of make applying for jobs a full-time job until you get one. Also helps sometimes to set weekly or daily goals for applications and interviews to kind of gamify the process and help keep you motivated moving forward. There's an emotional side of job loss. So, while you're focusing on the financial stuff, you want to make sure that you kind of honor those feelings of grief, anxiety, and uncertainty that you might have. So it's okay to feel those emotions. Take steps toward taking care of your mental health as well. So obviously you're trying to cut costs, but at the same time, make sure you leave yourself a little bit of room and give yourself permission and some grace to take care of yourself, even if it means, treating yourself to, a fun day out or something every now and then, just to kind of break up the monotony of applying, or, seek therapy or counseling if that's helpful. So when you're planning for the future, reflect on what you want next in your career. This could be an opportunity to reassess kind of what direction you're going. Maybe you do love your career and you want to stay in the same kind of role, or maybe you want to pursue education towards something else. Maybe you want to start a business. Maybe you want to transition to a new industry. Not saying it's not a bad situation, but losing a job is not a good thing. But you could also take advantage of this space to look at what's next. So it could be overwhelming. Obviously, it's never fun to lose a job. There's a lot of anxiety involved. But focus on all those things that we just talked about, logistically and emotionally, and on your career path as well. And don't be afraid to seek help. Look for help from professionals, professionals in your network, your tax pro, your financial advisor, your friends, your family, people in your personal network. Take advantage of every opportunity you have and really focus on that next opportunity, whether it's a new job or even starting a business. Really kind of use that opportunity to go full-fledged into what's next on your journey. And you've got options. So with that, there is a checklist that goes with this podcast. If you go to this podcast, which is episode 240, there's a link to the article version of this on my website. And at the bottom, you can download a PDF checklist that kind of puts all this in visual format, if it's helpful, to give you a checklist on kind of what to do when you lose a job as well. So some people like the visual format of that better. So feel free to go grab that as well. Again, episode 240. All right. Thanks, everyone, for joining me today. As always, I'm here if you want to reach out. You're welcome to message me on social media, send me a message through my website, or even just book a consultation, which is free. If you want to chat more about maybe working with me or just have general questions, you can ask those as well. And that's on my website at elevationfinancial.com. All right. Thanks, everyone, for joining me today. Have a great day. We'll see you next time.